In 2026, Malaysia looks like a big success story, at least on paper. The economy is growing at a strong 5.2%, and the ringgit is doing really well, sitting at Ringgit Malaysia 3.89 against the US dollar. That's the strongest it has been in years. If you ask investors or read international reports, they'll tell you Malaysia is one of the rising stars in Southeast Asia. Everything seems to be going right. The country is attracting big investments, building modern industries, and becoming more important on the global stage. But if you walk around your neighborhood, talk to people at a mamak stall, or go grocery shopping, you'll hear a very different story. People aren't talking about GDP growth or exchange rates. They're talking about how expensive things have become. Food costs more, rent feels heavier, even simple things like eating out or filling up petrol seem to hurt more than before. There's this growing feeling that even though the country is doing better, life itself is getting harder. This is what many people are starting to notice. It feels like Malaysia is getting richer, but ordinary people don't feel it. You could call this the Malaysia Paradox. On one side, the country is winning. On the other side, households are struggling. The big numbers look great, but the small, everyday numbers, the ones that matter most to families, are going in the opposite direction. So what's really going on? To understand this, we need to break it down into 5 simple reasons why the economy is booming, but people still feel squeezed. First, the GDP vs pocket gap. Let's start with the biggest issue, the gap between economic growth and what actually ends up in your pocket. When you hear that Malaysia's GDP is growing, it sounds like everyone should be doing better. But here's the thing, not all growth is the same. A lot of the growth today is coming from very high-tech industries, especially things like data centers and semiconductor investments. In the past year, Malaysia has become a hotspot for global tech companies. Big names like Amazon, Google, and Nvidia are investing billions, especially in places like Johor and Selangor. These projects are massive. When one of these data centers is built, it adds a huge boost to the economy. But here's the catch. These projects don't create that many long-term jobs. During construction, yes, there's activity. Contractors, builders, suppliers, they all benefit. But once everything is up and running, a data center doesn't need thousands of workers. It runs mostly on automation and a small team of engineers. So while billions are being spent, most of that money doesn't flow into everyday jobs. A lot of it goes into imported technology, advanced chips, cooling systems, specialized equipment from overseas. That money doesn't stay in the local economy. It's like building a giant tower of wealth, but most people are standing far below it. Meanwhile, regular industries like retail, small businesses, agriculture aren't growing as fast. These are the sectors that actually employ millions of Malaysians. So if they're not doing well, most people won't feel any improvement. That's why for many people, hearing about a $15 billion investment doesn't change anything. Their salary doesn't suddenly increase, their rent doesn't go down, life stays the same or even gets harder. So yes, the economy is growing, but it's growing in a way that doesn't directly benefit most people. Second, the subsidy rationalization aftershock. Now, let's talk about something Malaysians have been used to for decades, subsidies. For a very long time, the government kept essential things cheap. Fuel, electricity, basic food, these were supported so people wouldn't feel the full impact of global prices. No matter what was happening in the world, life in Malaysia felt relatively affordable. But in 2026, things are changing. The government can't keep spending like before. Debt is rising, and there's pressure to manage the budget better. So instead of giving subsidies to everyone, they are now focusing on targeted subsidies, helping only those who really need it. On paper, this makes sense. But in real life, the transition is painful. For many Malaysians, this is the first time they are seeing real prices. Electricity bills go up, fuel costs change, food prices adjust. It feels like everything is becoming more expensive at the same time. Even though the government provides cash aid like TR, it doesn't always fully cover the increase. Think about a small business owner, like someone running a bakery. If their electricity bill goes up and transport costs increase, they have no choice. They must raise prices. So bread becomes more expensive. Then multiply that across many businesses, and suddenly, everything costs more. Now imagine you receive some cash aid, but your total expenses increase even more than that. At the end of the month, you're still losing money. That's why many people feel like they're moving backwards, even though support is being given. In a way, this is the price of moving forward as a country, but that doesn't make it any easier for people who are feeling the pressure every single day. Third, the M40 squeeze. This is where things get even more interesting, and honestly, a bit worrying. A lot of attention is given to helping the B40 group, and rightly so, but there's another group that is quietly struggling, the M40. These are people who are not considered poor, but they're far from comfortable. Let's say you're earning around $3,000 to $4,000 a month in a city like Kuala Lumpur. On paper, that sounds okay, but in reality, it doesn't go very far anymore. Rent is high, food is expensive, transport costs add up, and then there are things like medical bills, insurance, and education. One of the biggest issues here is that the M40 often doesn't qualify for government aid. They're expected to manage on their own, but at the same time, their costs are rising faster than their income. Imagine getting a 4% salary increase, but your expenses go up by 8%. Every year, you're actually worse off. That's why you're seeing more people taking on side hustles. It's no longer just about earning extra, it's about keeping up. People are driving for Grab after work, selling products online, or doing freelance jobs just to maintain their lifestyle. And even then, it feels like they're barely keeping their heads above water. This group is the backbone of the economy, but right now, they're under a lot of pressure. Fourth, the imported inflation trap. Now, let's answer a question many Malaysians are asking. If the ringgit is stronger, why are things still expensive? It sounds logical that a stronger currency should make imports cheaper, but the reality is more complicated. Malaysia relies heavily on imports, especially when it comes to food. Not just finished products, but also the raw materials used to produce food locally. For example, chickens in Malaysia are fed with imported corn and soy. So even if the ringgit is strong, if global prices go up, local costs will still rise. And in 2026, the world is facing multiple challenges: conflicts, supply chain issues, and higher shipping costs. These factors push prices up globally. By the time products reach Malaysia, the cost is already increased. So even with a stronger currency, Malaysians don't feel much relief. Another issue is food security. Malaysia still depends a lot on other countries for basic food items. That means we don't have much control over prices. If something goes wrong globally, a drought, a war, a shipping disruption, we feel it almost immediately. In simple terms, Malaysia doesn't set the price, we just pay it, and that makes life unpredictable and often more expensive. And fifth, the Visit Malaysia 2026 side effect. Finally, let's talk about something that sounds like good news: tourism. The government is aiming to bring in millions of tourists through Visit Malaysia 2026, and it's working. More tourists mean more business, more spending, and more economic growth. But there's a hidden downside. When tourists come in large numbers, prices start to shift. Businesses begin to cater to those who can spend more. A tourist from overseas might not mind paying 20 ringgit for a coffee, but for locals, that's expensive. Slowly, affordable options start disappearing, especially in popular areas like Malacca or Penang. Prices go up because demand is higher. At the same time, rental prices increase. Property owners may prefer short-term rentals like Airbnb because they earn more, but that makes it harder for locals to find affordable housing. Transport also becomes more expensive during peak tourist seasons. So while tourism boosts the economy, it also raises the cost of living for locals. It's like success comes with a price tag. So, is Malaysia failing? Not really. What we're seeing is a country in transition. Malaysia's moving from a developing nation to a more advanced economy, and that process is never smooth. Right now, we're in a difficult middle phase. Prices are rising quickly, but incomes haven't fully caught up yet. The growth we see today is building the future. Better infrastructure, better industries, more opportunities. But in the present moment, many people feel the strain. It's like upgrading a machine. While the upgrade is happening, things get noisy, messy, and uncomfortable. That's where Malaysia is right now. The country is moving forward, but for many Malaysians, the journey feels tough. The economy may be roaring like a tiger again, but feeding that tiger has never been this expensive. If the data shows the economy is booming, but the wallet says otherwise, which side of the story is more real? Share those thoughts in the comments below. If this helped explain the Malaysia Paradox, feel free to hit the like button and subscribe for more analysis.